Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Connor Campbell, who is a financial analyst at Spreadex. And today Connor has brought along 3 stocks that will certainly make you thirsty in the build-up to Christmas. We start off with Britvic. Now, many years ago when I was on the buy side, I used to get many calls from the sell side brokers saying, this is going to be a takeover target. It never happened. It got boring. But here we are. Britvic has been performing well. I mean, if you own this versus Fever Tree, maybe you're not so happy, but up 30% on the year. Good stock to own. Yeah,
it's for a company that owns sort of just very, they're not flashy. It's, Robinsons, Tango. It has the UK licenses for stuff like Pepsi Max and 7-Up. Things that, like I said, not flashy. They've been around a long time. And it's interesting as well because you'd argue they're sort of sweeter drinks that aren't necessarily in vogue at the moment. They're sort of, you've seen Coca-Cola struggle and try and diversify away from fizzy drinks and things like that just because of that sort of more health-conscious society. But yeah, Britvic's just doing very well. I think it's half-year figures in May. Revenue was up 11.5%, and that was up 3.7% at a constant currency basis. Pre-tax profit was down 7% to 50 million, but that was largely due to restructuring costs. As you can see, that didn't really impact things too much. As you can see, it sort of thrice struck above 780, and that's sort of its all-time highs, really.
Yes.
Obviously, it does stress the fact that it's thrice struck it and then pulled away suggests there is perhaps room for it to fall after its figures on Wednesday. In terms of the third quarter figures in July, again, very strong. Constant currency revenue was up 6.5%. I think volume was up 2.3%. Actual realised price up 2.9%. In the UK, revenue was up 4.9%. There are some slight concerns. I think most of that growth comes from carbonates. Interesting, as we were saying. Not necessarily the case you've seen with things like Coca-Cola, but drinks like Pepsi Max and RY, lemonade, I think they recently rebranded that. Sales in that division were up 7.6% compared to stuff like Robinsons and Fruit Shoot and J2O. I think sales were only up 0.4%. I think that's mainly due to tougher pricing comparisons in the grocery sector. So that's dragged sales lower.
So numbers this week?
Yeah, numbers this week on Wednesday. I think it really needs ideally see some kind of turnaround in the but improvement in the stills sector. I think it basically, as long as it can avoid a significant widening of that pre-tax profit fall from the half year, say if it can get that down to 5% for the full year, I think it should be okay. I guess we're heading into what could be a pretty grim period for any retailer in the UK, basically. So I think its outlook for its next financial year, I think, is what could be key for Britvic this week. Our clients, there are not loads of sellers around sort of the 760 mark, but there's enough to suggest that it's got a bit rangy in the last few months. Been trading around between like 740, 780. Like I said, has a few times hit that 780 mark and pulled back. I think our clients perhaps looking that, it's not going to take a lot of the slightest bit of bad news for it to pull back a bit. It's been, even if it just falls to the lower end of that range, it's still up quite strong on the year, but it could be looking to fall back towards 740. I think that's what our clients are looking for.
Well, let's look out for that, see if they're flat or numbers have a bit of fizz. Greene King, not a good year for them thus far, or certainly the second half of the year. What do we expect from Greene King?
It's interesting. I think last week it hit 5.5-year lows. That was after the Mitchells and Butler report. Obviously, sector peers, that report from Mitchells and Butler wasn't very good. Back in June, its full year figures in June were pretty decent. I think like pub sales were up 1.5%. Total revenue was up 6.9%. Adjusted pre-tax profit was up 6.6%. They're healthy figures. However, it sort of spoilt those figures by warning that the upcoming year would be tough, economic uncertainty, sort of the squeeze on real wages and sort of discretionary spending. It did say that it thinks due to sort of the comparative cheapness of going to the pub compared to other activities, that should sort of maybe withstand any wider fall in discretionary spending. And that it felt like it was in a position to sort of outperform its peers. However, then in September, I think it was its third quarter figures, and that sort of the warning, the fruits of that warning come into blossom. Really, it sort of plunged 15.5%. So I think it posted a 1.2% decline in like-for-like pub sales. Blamed sort of a classically dreary British summer.
Yeah, it's usually that or like for likes of a football tournament.
Yeah, exactly. And weakened food sales as well. Food sales have been sort of struggling in places like this. I guess if you're not going to be eating out, when your wallet starts to get a bit squeezed, you're not going to be eating out. How can you be not going to be eating out if you are going to be eating out, it's not necessarily going to be in a pub, basically. So I think it's really struggled then, and since then has really struggled, like I said, with the Mitchells and Butler report last week and things like that, just sort of the gloomy atmosphere around the sector. I think adjusted pre-tax profits are expected to fall 8% to 127 million. That's not great. I can't see it pulling out too many positives. However, just because of how sharply it's fallen, it might be the opposite of Britvic, really. It's got the slightest bit of good news. If its like-for-likes have improved in the fourth quarter, perhaps, then it could bounce back towards the 525 mark. It's not going to take a lot for it to see, I guess, like a fairly substantial bounce, really. And I think that's why our clients have been really, really heavily buying around, since it especially fell towards the £5 mark, really heavily buying around that level. Just look, scraping around, has it hit the bottom of the barrel? Is there room for it to climb heading into Christmas?
And let's have a look at the last stock. Well, Marstons in the similar space and a similar chart, really, for them. They're down 25% on the year, almost similar to Greene King.
Yeah, it's sort of, I guess the only difference has been Marstons has been far more consistent with its decline. Greene King sort of really came around that September, whereas Marstons has been sort of falling since May. Interestingly, its figures in May were pretty decent, but it seems to have been that it bought the Charles Wells Brewery, which owns like Bombardier and Young's, I think, for £55 million, and investors just didn't seem too happy with that deal. I guess that's quite a lot in terms of. Then we'll see in the moment that. One of its sort of most notable aspects of its full-year update in October was that it's cutting. It announced that it was going to open 15 pubs. I think in total 23 new locations, but 15 pubs in 2018, and that's down from the previously stated 20 new openings a year. Right. So it does suggest that they're having to sort of pull back their expansion plans. So you combine that with the sort of the big splurge on the Charles Wells Brewery, and maybe investors are sort of doubting the value of that buy. Marstons themselves have been pretty positive about that move. They also, I think, they signed a deal around the same time with Punch Taverns to provide, despite them being a rival, to provide sort of exclusive drinks offerings like the 1,300 properties Punch Taverns have. And I think they get paid even if the pubs only offer like one of their drinks or none of their drinks or something. So it's a pretty decent bit of business for Marstons. In terms of its full year figures in October, I think sort of destination and premiums, which is the main thing, like-for-likes were up just 0.9%. Again, like with Greene King, food sales really dragging that down. At taverns, like-for-likes were up 1.6%. At least pubs are up 1%. I think volumes at their brewery were up around 1.5% or something like that as well. All those figures are decent. However, you also had back in, I think it was back in June or July, their CEO say that to combat rising costs, they need to see consistent like-for-like sales growth of 2%. So when you stack those two figures together, then it suggests that perhaps Marston's pre-tax profit figures, its margins aren't going to be too good on Thursday. In terms of our clients, though, like with Greene King, buying quite heavily around the £1 mark, £1.05 mark. I think back in October, Marstons said that its sort of full-year sales and full-year earnings and profit would be ahead of last year. I think the reaction on Thursday is going to be, well, just how far ahead of last year are they? If it's like 1%, then they're not going to see too great a bounce. But it's fallen quite sharply. Again, I think largely on wider sector concerns than its own performance. It avoided the kind of like-for-like sales decline that Greene King saw. So that's something at least. I think sort of at the moment, just avoiding, flat is the new growth. So the fact that it posted any growth at all is fairly decent. I think it could be in line for a bounce on Thursday if it can eke out any kind of pre-tax profit growth, basically.
Well, we'll watch out for that. In the meantime, I think cheers is the apt thing to say to you, Connor. Connor Campbell, financial analyst at Spreadex. Thank you for joining us.
Thanks so much.